Bank of America thinks that we can get our rates down to 5%. That's if the Fed start buying MBS, mortgage-backed securities, to help ease quantitative easing. Here's the thing. This article is from Resi Club, which is a local club around here. If you want to get into real estate investing, this is a peer group, teaches you how to invest and get into that mindset. I'm sure you get 10, 20 texts every day. Hey, I'm looking for a fixer-upper. Well, guess what? Anyway, this article comes back and talks about the 30-year fixed. And by the way, we'll talk about the 30-year fixed loan coming down today. As you can see in the title of this video, 30 years right now, we're at a calendar year low. We've seen it come down lower, obviously, but in recent months, the 30-year fixed mortgage has hedged down. That's attributed to gradual compression of the mortgage spread. Now, what that means is there's competition, right? Lenders don't make money unless they close a loan, unless they sell a loan. With the lack of buyers out there looking for homes, the refi market right now is atrocious. So that's not even a thing right now. If you're looking to buy a house, there's a few less buyers out there. It has been like that for the last couple of years, which breeds its own competition in the rates arena because the lenders want to close a loan. My loan agents are always calling me, got any buyers? No, I don't, because right now is not a good time. Gradual compression of the mortgage spread, meaning lenders are going to take less profit, which that's good for you. So we were at 316 Mortgage News Daily. Mortgage rates hit historical relationship with inflation and unemployment. What would it take to get the average 30-year fix to 5%? The MBS team at Bank of America, I'll go into that in a second, does see a path to 5% if the Fed does MBS quantitative easing and yield curve control, driving the 10-year T-bond to 3 to 3.25. Well, we're not going to get that with 0.25% drop that we're expecting today. Would be great if we got it today. However, it's probably not going to help the overall push to where we need to be. Remember, I've always, over the recent year or two, I've mentioned the fact that our parity point for buyers and sellers to be happy right now is about 5.5% for the mortgage rate, a 30-year jumbo, what have you, 5.5%. We're bringing it down to 6%. You can get it down below there with points, but in order the buyers happy to come back out in droves, we need it to come down lower. We always want it lower for our clients. Doesn't matter to me. It's you that gets stuck with a payment for a year or two until you can refinance. Long-term yields such as the 10-year Treasury, average 30-year fixed mortgage rate are determined by demand or lack of demand by the underlying bond. Fed stopped buying it about 2022. If the average 30-year fixed mortgage rate falls to 5% anytime soon, Bank of America believes it would likely be because the economy has taken a negative turn, or perhaps the central bank adopted a new policy approach and resumed buying mortgage-backed securities. This means that if rates drop down to 5%, all the buyers would come up and buy all the properties today, which would bring more competitions to the homes that are currently for sale, because we're not going to get an influx of homes because of that 5%. It might trigger some home sellers that are stuck at 2.5% to say, you know what, I can afford a 5%. The problem is we'll go back into the inventory issue that we had 2 years ago. We had a lack of inventory and our buyers were not very happy with it. They weren't happy with it. They started being picky. And today we're in kind of a quasi, I want to say it's a balanced market. It's a quasi buyer's market, but buyers are being picky. However, depending on your price range, like the house that I have right now, I have it listed at 1.25, and I know it's worth a little bit more. Getting offers coming in, they're trickling. I saw one agent threw in an offer. He didn't replace the name of the agent or the house that they previously put an offer on, which tells me that they're writing multiple offers to see which ones they can get. Not something you're supposed to do, but in a frustrated market, frustrated buyer, they're going to do that. Are we going to get to 5% anytime soon? I don't think so. I think what we're going to see today is rates come down 0.25% from the Fed. That means short term and the loan will come down, but we've already experienced rates coming down in anticipation of this since the beginning of this month. Today's the 17th. The last quarter high is 7% on May 19th. Now we're coming back down. Now we're at 6.19, 6.15. This is not an application and underwriter going through and quoting you 6.15. This is what the starting rate is. Then they come in and take a look at your assets and your credit and your job and how much money you have and down payment and all that stuff. We've already talked about that. So if you look at what the average price is for a house in, get over here, in Santa Clara County is 2.4 million and change, 30-year fixed. Brought it to a jumbo, your down payment is $483,000, and you're unquoted 5.69 with 0.75 points. So your rate is 5.6. You can get it down below 6% today. Is this the right one for you? I don't know. You have to talk to your lender. If you don't have a lender, let me know. I'm happy to help you out with those. I don't make money. I don't care. But I do have people that I trust. So if you're interested in learning more about getting approved for a loan, let me know. If you haven't done so already, fill out this form and download your homebuyer's checklist. This gets you to look and compare and contrast different homes as you go through and look at 5 or 6 different homes at a weekend. And then you can see which ones you like the best. Because I can tell you, if you look at 6 houses, you can't tell me which ones have dual pane and which ones don't, and which ones have air conditioning, or which ones have cracks in the walls, or which ones have a ganked up kitchen. When is a house not worth what you think it's worth? When the buyers tell you that they're not going to write an offer, or your agent hasn't gotten a response as to follow up, or your house hasn't sold in 110 days. This one right here, San Lorenzo, not my listing, 1.75, says it's a new listing. Let's take a look at it. It's 4-bedroom, 2-bath. Sure, it's pretty inside. Wow, nice staged. You have a nice granite countertop. And at least he did a floor plan. Good. And you have the artsy fartsy outside homes, whatever. Great. When your house is not worth what it's worth, it sits on the market for 110 days. 110 days. Look, I can't pull a rabbit out of my hat. I sell houses. And I know that there's agents out there on short video saying it's not the price. If you think your house is worth that, we can market it and track the right buyer. Yeah, but up to a certain point. And here's the thing. When you have an average day on market of 16 days, your house doesn't sell for 100 days, your house is overpriced. I don't care what value it is. I don't care what you've put into it. If you don't get offers in the first 7 days, you're priced way out of whack. You're priced way too high, period. I don't know how else to explain it to you. If you have a $40 million home and you can afford for it to be on market for a year and you want to be a market maker, absolutely. But if you have a commodity track home that you fixed up and it's really pretty, in your eyes, it might not be the thing that buyers are looking for. So how do you do that? Well, one, go to open houses and see what other houses look like and compare them to what your house is and see what the cool things are, which you like, and you put it into your house. You have to invest money into making your house look nice, right? This guy did a great job making it look nice. But after 110 days, you don't have any offers. It's the price. Every buyer on the internet has seen your house. And the buyers that wanted to take a look at the house looked at the house. Buyers are far more educated today than they have ever been before. They have access to data that we all have. And it's about a broker is somebody that brings a buyer and a seller together and matches them together. And without that, if you have a seller that has an unreasonable price, your house isn't going to get offers. After 110 days, what this tells me is there's a seller here that's stubborn and he just doesn't want to deal with it. He doesn't want to hear it. If you can't do the job, I'm just going to wait until the market comes back or until the right buyer comes. Bank-owned property of the week, Keto Road, not my listing, $4.3 million. This is owned by the bank. 5 bedrooms, 6.5 baths, built in 2004. Let's take a quick look inside. This agent really knows what they're doing. They're having an open house this weekend. It's majestic. Imagine what you can do with it. $4.32 million and you have to fix it up. And it's a bank owned, meaning that it's going to be as is. Oh, and by the way, it's probably in the fire district. Gated estate, huge 6,000 square foot home with bedrooms on 3 levels. Private way leads to a 1 acre lot. You know, this might be a good buy, but I wouldn't buy it. Homes near Apple. Let's talk about this guy right here. Location. Where's this one right here? Mine Court, not my listing. Let's take a look at it. We already see that it's semi-walking. You have to walk up here and get into the thing. Mine Court, 4 bedroom, 3 bath, 1,700 square feet. List price decreased because even though the lot is semi-large and the house is nice, 2.29, I don't know what they did. They built this in 2010. Been on market 30 days. You know why? Because it's near the freeway. It backs into the free. Your back neighbor is the freeway. Functionally obsolete is the term that comes in my head. I don't care what it looks like inside. If your house is by the freeway, your house is not worth what other houses are worth around that area. Your comps are, you got to discount your price by like 20-30%. So maybe that's what this is, but I can assure you that this house is not going to sell for $2.3 million because of the location. I don't care what it looks like inside. We don't even have to look inside. If you want, go on the MLS, go take a look at 10631 Mine Court, and you'll find that it's not $4.2 million, 7 bedrooms, 6 full baths, 3,300 square feet, built in 2025. And they didn't even put a front lawn. It's walking distance to downtown Castro Street, Mountain View. So yeah, nice. It's nice, but a 1 bedroom, 1 car garage. Wait, 1 car garage. Oh, but Vito, nobody ever parks in their garage. It doesn't matter. People expect to have a 2-car garage. Maybe there's a reason for it. Maybe there's some kind of code. It's pretty inside, but guys, $4 million, you expect to have more than 1 car. I don't know how else to explain it to you. I don't get it. What is this? Is that an ADU? No ADU. I have no idea what that is. Maybe it is an ADU. I have no idea. Let's see if they did a map. Yep, maybe. Yeah, that's the ADU right there. Let's take a look at the map, see what that really means here. All right, 40 days on market, everything's coming down. Everything's coming down, right? The days on markets are coming down. Well, the 90 days on market increased, but bank-owned properties got flushed with a couple new homes on market. That one on Keto is fun to look at. This one right here, Keto Road. Yeah, but not for $4 million. Pendings are lackluster. Last week was a pretty devastating blow to 68, but that's what, back on market, we have 28. And in Santa Clara County, we have 67 total. And withdrawn, we have 10, expired were 8, and canceled were 37. So back on markets, it's not a huge indicator. It's just something to shake the ideology of what's going on in the market. People are struggling to qualify, but also they're know that if the seller's not willing to work with, they're going to walk, right? If you have contingencies in it, which is a property, termite, and appraisal and loan, and need to sell your house, there's a lot